So you're buying your dream home. Everything you should know before you sign that contract. Brought to you by Liberty Mortgage Lending Group. What you must know first. What's the difference between a pre-approval and a pre-qualification? How to pick a mortgage broker and a realtor that'll work for you. What paperwork is needed for your loan. What not to do during the process. What out-of-pocket expenses will you have before the closing? How to understand the closing costs and the down payment. The mortgage process itself, the important parts of your purchase agreement, what programs are out there for you, and some tips for a stress-free process. Why should you use a mortgage broker instead of an online lender? Mortgage brokers have a lot of lenders. This means many programs and competitive rates. Mortgage brokers do shop for you. Not only do they shop for your rate, they also shop for the best programs possible among all lenders. Mortgage brokers also fight through some of the problems that come up on loans, and even on the easiest of loans, problems do come up. Mortgage brokers also can help you negotiate some of the closing costs. In addition, mortgage brokers can and will start an appeal for an appraisal if there are errors. And they do communicate with your realtor, selling agent, and title agent in most cases for your benefit. This is very important for your loan. Mortgage brokers typically are not paid until you close, so they're vested in getting your loan closed quickly and easily. What's the difference between a pre-approval and a pre-qualification? A pre-qualification is simply based on a conversation that you have with your broker. A pre-approval is always based on an analysis and a lender approval. A pre-qualification goes by what you tell your broker, while a pre-approval actually goes by what you prove to the broker to be true. Some of the benefits of a pre-approval include few financial surprises after you sign for your purchase, and your purchase is no longer contingent on financing because you are pre-approved with your income and debt being analyzed and reviewed by the lender. Let your broker know if you're going to have condo or homeowner association fees, as this could drastically change the debt ratio and change your pre-approval to a denial. How do you know if you actually have a pre-approval? Well, your broker will ask for a current pay stub or other proof of income in order to analyze your income. Your broker is going to also ask for bank statements to show that you do have the assets to pay the down payment or have the gift funds available. Your broker is also going to pull and fully review your credit and ask you questions for anything pertinent that might be a hindrance. And your broker is going to have the lender findings that indicate that it was approved by the lender and to tell you exactly what's needed for your loan. Don't train your broker. If they give you a pre-qualification rather than a pre-approval, it might be time to move on. What should your pre-approval say? Should say the terms of your loan, such as whether it is FHA, 30-year fixed, or conventional. It'll tell you about your loan. It'll tell you your required down payment. It'll talk about whether or not you need seller-paid closing costs and at what percentage you're allowed by the type of loan that you have. It'll also discuss any of the pertinent specifics of your loan, such as maybe you have an employment contract and you're using projected income for a job you haven't started yet. It's also going to discuss your debt ratio and make sure that that's based on your mortgage payment plus monthly insurance and taxes that are estimated, as well as any HOA or COA fees that are involved in the area that you're choosing your home. Typically, one pre-approval will be given for your realtor, and one separate pre-approval will be given to you that lists all of the documentation needed for your loan. Make sure that your debt ratio that's given includes the estimated monthly tax as well as the insurance costs to ensure a good debt ratio when you submit your loan so that you don't have surprises later. How do you know if you have a good mortgage broker and realtor? Well, a good mortgage broker will give you a full pre-approval just as we discussed. We'll also be available to answer all of your questions as well as educate you on your options. A good mortgage broker is going to be willing to communicate with you, your realtor, and everyone involved in the process. In fact, anyone involved in your process should be willing to communicate to everyone involved in the process. And a good mortgage broker will have excellent reviews. They will also give you rate options and program options to choose from and educate you on those so that you know what you're getting into and know what you want. They'll also give you rates without additional origination fees or points, unless of course you want a lower rate and you want to pay for it. A good realtor is going to provide you with some excellent reviews and also spend some time with you in a pre-purchase evaluation to be clear of what you want or need. That realtor will also know the market and be able to give you comparison properties to determine if the property that you want is actually worth the asking price and help you to determine what to offer on the property. They'll review the home for potential equity as well as preview the home with you to look for red flags for repairs or other things that could be costly to you later or could hinder your loan once the appraiser comes. They're also going to review the age of the roof and the condition of the AC as well as the appliances to prevent problems later that could cost you money that you don't have. And they'll explain the purchase agreement with you in detail to make you aware of important dates. What paperwork do you need at a minimum for your loan? Well, you're going to need 2 years personal tax returns, all pages. You'll need W-2s for all of the tax returns that you supply, as for all of the individuals on the tax return, even if they're not on the loan. If you're self-employed, 2 years of business tax returns, all pages, with all the K-1s applicable for the borrowers, will be required. 2 months bank statements, all pages, even the blank pages, both for personal and business. You'll need 30 days worth of pay stubs. You'll need a color copy of your government-issued photo ID, and if you're doing an FHA loan, you may need a Social Security card. Social Security income qualifications will require a Social Security 1099, plus the notice of award if you're using that income to qualify. If someone else pays a debt that's shown on your credit report, you'll need to supply 12 months of bank statements from that person to prove that they paid that loan for you. And if you own a property that you lease to others, you'll need a signed lease agreement as well as the property insurance declaration page, the property tax bill, plus a current mortgage statement. Keep in mind that you can only use the income from that property if you show it on your tax returns. For a full list of documents that you need, you can go to docchecklist.libertymortgageloans.com. When should you turn in your paperwork? Preferably have all of the documentation to your broker before the purchase agreement is signed. More documents are likely going to be required by the lender, so work hard to get any additional documents in within 48 hours. One of the benefits to getting your documentation into your broker prior to your purchase agreement is that by reviewing them, a good broker can pre-underwrite your loan to know what other documentation is needed prior to submitting it to the lender. Send PDF documents only. Don't send pictures. Lenders do not allow pictures. Scan all of your pages into one document, not one file per page. This might mean that you have to hand deliver them, mail them, or go to a fax vendor to fax them. Don't do these things. This is very important for your loan. Don't change jobs or income. Don't dispute credit. Don't add credit. Don't apply for credit. Don't increase balances on your credit. Don't deposit large deposits into your account without talking to your mortgage broker first. This includes your cash and your mattress money. Don't allow an appraisal to be ordered until you know that all of your credit income have been cleared through underwriting. You cannot get that upfront money back. Don't co-sign credit for anyone. Doing some of these things could cost you your loan and possibly your earnest deposit money. What costs will you have prior to closing out of pocket? Home inspections are not required by lenders, but they are recommended and they cost approximately $150 and up. Water tests are not required by lenders. They are varied in pricing. Credit report fees are required and it's between $25 and $50. Typically, it can go higher. Appraisals typically run between $450 and higher. They are required by the lender and the lender chooses your appraisal agent. Wind mitigation reports are not required by the lenders. They cost approximately $150 and higher, but they are required by insurance carriers for some homes and they can reduce insurance rates. 4-point inspections are not required by lenders, but they are required for insurance on older homes. The cost is typically $150 and up. When you're purchasing manufactured homes, a HUD IBTS form might be required if the label cannot be found on the home. This costs between $50 and $150. Also, an FHA foundation engineering inspection is required on FHA loans for manufactured homes, and they cost approximately $300 or more. A survey is required for title. You can ask your seller's agent if a survey already exists, and if so, you may be able to save yourself this cost. Condo associations typically require a questionnaire. It is required by lenders, and the cost is typically $150 and higher. Condo associations and homeowners associations also typically require an application fee. All of these costs are required upfront, out of pocket. They can be paid for with a credit card. However, they will be required to be paid upfront by you. Tips for your out-of-pocket costs. Know your inspection-related deadlines. Your realtor can go over that with you. Credit report fees are typically required up front, but application fees are not necessary. If a broker or lender requires it, it may be time to find a new one. Your broker should not order the appraisal until all loan conditions are clear related to your income and your debt, as well as any other mitigating factors related to you. Double check with your broker what conditions are still uncleared before ordering your appraisal. Don't allow an appraisal contingency in your purchase agreement. The lender selects the appraiser and no one has control over that time frame. Ask the selling agent to see if the seller has a 4-point inspection, wind mitigation, and survey. This will save you money. If possible, ask this in the negotiation and promptly have them sent to you, but also send them immediately to your title agent. Look in the rear exterior panels of a manufactured home to see if the metal riveted HUD plate is intact and in order to not have to pay for your IBTS HUD certificate. Understanding closing costs and down payment. Closing costs on your upfront loan estimate. There's no predetermined percentage for closing costs, no matter what anyone tells you. Both buyer and seller pay closing costs unless negotiated differently in the purchase agreement. All lenders charge an underwriting fee between $850 and $1,000. Origination fees or points are only charged when a broker or lender is charging you money for a lower rate. Title fees are determined by the title agent that the seller chooses and is different for all title agencies. Other fees such as FHA upfront mortgage insurance, which can be financed into your loan, manufactured home related fees, survey, appraisal, tax certificate, flood certificate, credit report, and other miscellaneous fees are determined by the lender or other third-party agents that will be listed even if they are paid prior to closing. Recording fees and local taxes determined by the county or state that you live in. Homeowners insurance and property tax prorations are estimates until closing. However, 2 to 3 months of each will be indicated on a closing statement for escrows. Make sure that your broker discloses these on your loan estimate and your pre-approval. Homeowners insurance will be charged in the closing for 12 months premium. Make sure that this is disclosed on your loan estimate. Ask your broker to prepare a closing cost with a worst case scenario so that you don't have any surprises. Many brokers will reduce this to win your business. This practice will likely result in increased closing costs at closing because all charges are not fully disclosed. Your down payment. Down payment is required by law to come out of your own funds or gift funds given by a blood relative. Down payment assistance can be used, but should be applied for far in advance as funds are limited. However, we do have a program that does not require an application in advance. You can see our down payment assistance programs that are not limited by going to dpa.libertymortgageloans.com. Lender credits cannot be used towards your down payment. And yes, you must have down payment money from some source. Understand your purchase agreement. Your earnest deposit will be subtracted from your closing fees, down payment, not your loan amount. Know that the loan commitment date and make sure that your broker gives a written commitment to you before the due date. More importantly, make sure that it gets to the seller prior to that date. This protects your deposit. This is yours and your realtor's responsibility to request that loan commitment. Brokers do not always issue a loan commitment without request. Know your closing date and know whether it's firm or whether it's an on or before date. Make sure that you've been given a disclosure about your homeowners association or your condo association, and make sure that you give all of that information as well as the condo association and homeowners association's contact information to your broker promptly. Understanding your purchase agreement. Make sure that there's no appraisal contingency at all. The lender selects the appraiser, and no one has control over timing of the appraisal report. This could put you in a precarious position where you don't get your appraisal money back and maybe something happens with title or something out of the control of anyone else happens within the underwriting of your loan. If the seller has agreed to pay closing costs, make sure that it's listed on the contract as up to and the amount they're paying or the percentage that they're paying. Don't allow a closing date for less than a minimum of 30 days from signing. Most brokers will be able to close sooner, especially with your cooperation, but things do happen and you need that time just in case they do. If your loan is a government loan such as USDA, FHA, VA, 203H or K, or any other specialized type of loan, ask for 45 days to close. Know the process of your loan. It starts with the pre-approval. Then you collect your documents and you submit them to your broker. While you're looking to select a home, when you finally have found one, you get a purchase agreement and you turn it into your broker as soon as possible. Then your loan is prepared and submitted to the lender. The loan could take up to 24 hours to register with a lender. After that, it goes to underwriting. Underwriting could take between 3 to 5 business days. Business days do include Saturdays. Any documentation that you can give prior to the purchase agreement will definitely reduce this time. Underwriting will come back either as cleared, except appraisal and title, or it's going to come back with more conditions. That's why it's so important to get all of your documents as soon as you can into your broker to review them prior to lender. Each time conditions are submitted, another underwriting process could begin with 3 to 5 days. Once underwriting is sufficiently clear, an appraisal will then be ordered. The appraiser will schedule within 24 to 48 hours, and once the inspection is complete, the appraiser will prepare the report to submit directly to your lender, who will review it, release it to your broker, and your broker will give it to you upon request. The appraisal takes approximately 5 to 7 days from start to finish. The appraisal might add additional conditions if the appraiser finds that there's some repairs that may have to be made to the property that the lender wants to have made. The lender then does a final review of the loan and gives a clear to close if no other conditions must be cleared. and then closing can't happen until a minimum of 3 days have elapsed from the clear to close status. Your broker will then begin reviewing the closing statement between the lender and the title agency to ensure accuracy before approving it and releasing it. Your broker will then schedule the closing with all parties and then do a final review of the closing statement to ensure that the only costs that are on that closing statement actually belong to you and are correct, and then review it with you thoroughly at least 1 day prior to closing. Know the programs. Conventional loans may offer no mortgage insurance programs, appraisal reimbursement, lender equity reimbursement to lower down payment, as well as other advantages when your credit score is above certain levels. Higher credit scores give you higher tiers of conventional loans that offer more and more benefit as your credit scores go up. FHA loans are great if you're short on closing costs, you've previously owned a home, need a lower down payment, or you need down payment assistance, or you have a high debt ratio or low credit score. Manually underwritten loans are loans that are done for individuals that have solid down payment money but credit scores lower than 580. USDA and VA loans offer 100% financing, but they have strict eligibility standards that require income review and, in the case of USDA, property eligibility. FHA 203K loans allow buyers to finance repairs if the home has sufficient equity. Some tips for a smoother process. Get a pre-approval, not a pre-qualification, and use our guidelines for it. Take the time to interview a realtor. You can use any realtor. You don't have to use the one that represents the seller. Get all of the paperwork to your broker before the purchase agreement. It allows time for review and allows your broker to ask for additional documentation if required, but it also means that you could reduce your underwriting to one underwriting that could be complete within 24 hours. Tell your mortgage broker everything related to your credit or prior derogatories. The lender is going to find everything. Revealing everything up front will help your broker structure the loan properly. Follow our don't list. This is very important. It could make or break your loan. Some frequently asked questions. What is a clear to close? Clear to close simply means that the lender has decided that all conditions have been met and you can now close your loan. What is APR? There are some fees, such as appraisal, that are required for loans that are financed versus those that are cash. In order to compare loan-related costs, these fees are added together with the interest over the life of the loan and converted to a simple percentage rate. This allows the buyer to compare a loan to another loan. Be sure when reviewing the APR to compare that all of the fees are shown on the loan estimate for proper comparison. Unfortunately, in order to sell themselves, some brokers do not fully disclose the correct APR. What is a loan commitment? This is the commitment from the lender that your loan has passed all income, debt, credit, and other miscellaneous borrower-related conditions. It typically means that the only remaining items are clear title and appraisal. Can I select my own title agent? Yes, you can. However, it typically will cost more because you will lose some discounts. Is a pre-approval a guarantee? A pre-approval is never a guarantee of a loan. In fact, no loan is a guarantee until clear to close. It simply means that you have been approved through the lender and diligence has been taken to ensure that you've met income and debt criteria and are a good risk for the lender. Other factors such as title and appraisal will not have been reviewed yet. In addition, all final decisions belong to the lender, not the broker. Can I select my appraiser? In most states, the lender is the only one that can select the appraiser. Can an appraisal be appealed? Yes. However, it is very unlikely that an appraiser will change the appraisal unless there are blatant factual errors such as square footage that can be proven to be incorrect. Why should I wait to order my appraisal? Brokers do their absolute best to approve income and credit. However, the final decision is the lender's. At times, things come up or are found to be proven incorrect by a verification of income from an employer. In these cases, your debt ratio may change, which in turn can cause the lender to change or deny your loan. That's why a true pre-approval is so important to prevent that. If that occurs and you have already expended the appraisal money, you will not get it back. Be smart about this. What is the debt ratio? Well, this is the ratio of income to debt. There are two parts that the lender looks at. The first is a comparison of income to your house payment. Your house payment includes principal, interest, monthly tax, monthly homeowners insurance, mortgage insurance, and any condo association and homeowner association fees that are applicable. That's why it's so important to ensure that when your broker is estimating your debt ratio, that these items are estimated into the potential cost of your monthly payment to make sure that your income can proficiently afford this. When comparing brokers, should I have them all pull credit? Absolutely not. Every time you pull credit, there's a score hit to your credit report. Mortgage credit can take a bigger score hit than most. Know your credit score when speaking with your broker. A pre-qualification can be given with your verbal credit information. And preliminary closing cost scenario and interest rates can be given with that verbally as well. However, know that when your credit is actually pulled, all of this might change based on the actual score and income evaluation. Only have your credit report pulled when you have found a broker and you're comfortable with that broker. Do I have to use the mortgage broker my realtor suggests? No, you don't have to. If I need seller paid closing costs because of limited funds, should I also try to negotiate a lower purchase price? Not necessarily. Sellers won't likely negotiate a lower purchase price and seller paid closing costs. If you have a choice between lower purchase price and seller paid closing costs, your choice really is, do I want to pay less at closing? Or do I want to pay less over the course of 30 years in payments? Typically, getting seller-paid closing costs is more beneficial than a reduced purchase price when you have limited funds for closing. I was told that I could get a credit from the lender for my closing costs, but my interest rate went up 1/8. Should I take the credit? A small increase in interest will not likely affect your payment by much. The question then becomes, do I want to pay less at closing to keep more in my bank account? Or do I want to pay less over the course of 30 years? Resources. You can apply securely online at apply.libertymortgageloans.com for a pre-approval in less than 1 business day. We have down payment assistance programs available for people with scores over 580. Review dpa.libertymortgageloans.com. We have a free mortgage loan calculator that you can use to play around with your mortgage payment at loancalc.libertymortgageloans.com. We also have a borrower document checklist that you can look at to see what documentation is going to be needed at docchecklist.libertymortgageloans.com. In reviewing that document checklist, there may be some items that aren't familiar to you. If they're not familiar to you, they probably don't belong to you. You can probably ignore those. To learn about loan basics, simply go to loanbasics.libertymortgageloans.com. To learn the loan process, simply go to loanprocess.libertymortgageloans.com. And you can always go to the USDA website to check USDA eligibility. See our website for the PDF translated version and the audio version of this presentation. Realtors may have this presentation branded to them by contacting us at info@libertymortgageloans.com. Webinars are available for scheduling, as are in-house presentations. For more information, questions, or a free consultation, please call 239-215-3850 in Florida or 470-443-1555 in Georgia. Thank you for taking the time to review this full presentation given to you by Liberty Mortgage Lending.